do you top tick? How do you bottom tick? Today I'm going to show you guys. You guys have been all up in my DMs telling me, oh, how did you know we were going to reverse there exactly? And today I'm going to put you guys onto the sauce. But yeah, let's get into it. One of the ways I do this is with standard deviations. And before we get started, let me just explain to you guys what standard deviations are. Standard deviations are basically a fib style tool that helps you map out where price could push to next and where it could pull back or reverse. So think of it like projected levels above or below a move that traders use as like possible targets or like reaction zones. And don't worry guys, I'm gonna explain everything to you. There's two ways to draw standard deviations. One way is to draw it on the displacement leg, and one way is to draw it on the manipulation leg. For the displacement leg, the reason why it's called displacement is because you displace a high and then you pull back, right? So on the displacement leg, you would draw it from wick to wick, and it's drawn forwards as you can see. And look, if we go up, it gives us our projections. And for the manipulation leg, it's backwards. It's wick to body. And what is a manipulation? A manipulation is basically this part. What's basically happening here is that we're taking out this liquidity and it causes people to think, oh, we're about to go higher, we're about to go higher. And then you basically sweep that liquidity, you create a manipulation leg, and this manipulation leg gives us targets. And the way you would draw it is wick to body. It also gives you your projections, as you can see. And a lot of you are wondering what the settings are. Here they are. This is the tool you want to look for on TradingView. It's called the Fibonacci retracement. Here are the other settings if you need. Now you know standard deviations are important, but do you know what to look for? No. So I'm going to tell you guys what you need to look for. On the Fibonacci retracement, right? The key things that I look at are these two zones. -2 to 2.5. And I also look for the -4. These two zones is where I see reversals. This -2 to -2.5 can give me a full reversal, or it can just give me a pullback. -4 gives me the actual reversal. So for -4, you wouldn't expect a pullback, you would expect a full-on reversal here. You might be wondering, why do I have so much other levels on my chart? The reason why I have so much other levels on my chart is because I like to see these levels give reactions, because I want to know I'm drawing the standard deviation right. And how would you know that you're drawing the standard deviation right? The way you would know you're drawing the standard deviation right is because at every level you see a reaction. So if I see a reaction at -1, -2, -2.25, -2.5, and then 3, 3.25. If every level is giving a reaction, it's like I'm drawing a good deviation. So I would be more confident that at -4, we're going to get a full reversal. So in summary, the two most important zones are the -2 to -2.5 zone and the -4 zone. Just to summarize what they mean, the -2 to -2.5 can either give you a possible pullback, or it can just give you a full reversal. And -4, I would just expect a complete reversal. Here are two ways I gain more confidence in my standard deviation pulls. One of the ways is that you get reactions at all levels. So you get a reaction at -1, -2, -2.5, -3, -3.5, -4. I would be way more confident because I know that the fib is being accurate if every level is giving me a reaction. Also, another way is by looking at the fib you drew and seeing if it lines up with important liquidity, important highs and lows. It'll make you more confident because you know that the numbers are giving you actual targets that would cause the market to move or shift momentum. I'm going to show you guys two examples of manipulation legs that give us standard deviations and two examples of forward legs that give us standard deviations. I'll give you an example from today. Here's an example of a forward leg, and this was literally from today, which gave us the top tick for literally the whole move down. I literally top ticked it. The way I like to think about standard deviations is if I'm trying to find the top, I'm looking for the lowest point, right? So when I'm looking at this chart, where's the lowest displacement leg, right? When I grab my fib tool, I see that it's right here. And remember, forward leg is wick to wick. As you can see, -1 gave us a reaction, -2 gave us a reaction, and then when we get to -2.5, guess what? We also get a reaction. And remember, -2 to -2.5 can either give us a possible pullback or it can give us a full reversal. Once I saw that we hit -2.5, I had a limit set right there. My limit got hit, and for standard deviation trades, or honestly all trades in general, I always risk 12.5 points to make 50 points at least. My RR is always at least a 1 to 4. Let's say we're going for a 1 to 4 right here, right? Our 12.5 stop never got hit, and guess what? That gives us the high of day, which then runs up how many points? Let's look. That standard deviation gave us, remember, 408.25. 408.25 is our entry. How many points did we dump? We dumped over 550 points, okay, just off a simple standard deviation, and you would literally top tick the whole move. Here's another example of another forward leg. This was from Tuesday this week, right? As you can see, London did its thing, right? We swept London high. At the highest point, we have a displacement leg. We pull back as you can see, and we draw this wick to wick, guess what happens? What does -4 give us? The whole reversal, the bottom of the day. Look at how many points that is. Let's say we were to do the 12.5 stop loss again, long position. 697.25 is going to be our entry, and we're risking 12.5 points, remember. Just look at how much this runs. Like, come on. 697.25, let's say you set a limit there. This runs over 400 points easily. And that's just two examples of forward legs, which are displacement legs, wick to wick. As you can see, this is how I top and bottom tick. Obviously, there's more ways I do it. This is one of the ways, and it's really OP. And now here's an example of drawing the standard deviation on a manipulation leg. Remember, we're trying to draw it on the manipulation leg. As you can see, we go up. This would be the manipulation leg. You see why? Because it makes you think we're about to go higher. We swept liquidity, but then we end up reversing. And remember, on the manipulation legs, we draw them wick to body. It would be drawn like this. Wick to body. And guess what? We have our -4 right here. And how many points does it give us? So let's say we were to take a long position here. Remember, 12.5 points. Let's just say you targeted London high, for example. Bro, like, look at how much this runs, bro. It's not even funny. How many points of drawdown would you even be in this trade? 764.75 got hit. You would be 3 points in drawdown to catch how many points? You would literally bottom tick 136 points. Just off a simple standard deviation, which is crazy. Let me show you guys one more example of another manipulation leg. Okay, here's the last example. We have this, right? This is the manipulation leg because it swept this high. And then we end up, you know, coming down. So where would it be? It would be on this leg. Now, how do we draw it? Let me show you guys. So the way you would draw it is, remember, wick to body, because that is the leg that manipulated. And what does it do? Like I said, limit -4, that's the reversal point. 997, let's say you were to enter a long position, again risking 12.5 points, and guess what? This gives you the bottom of the day, literally bottom of the day, bottom tick. 997, right? You would be how much in drawdown? You would be 2.5 points in 2 to 3.5 points in drawdown before you literally catch this whole move, which is how many points? Okay, bottom of day. Remember, the way you take profits is completely up to you. Look at how many points. Literally. Let's extend it. You would literally catch the bottom. You would literally bottom tick whole 362 points. I'm telling you guys, standard deviations are super powerful. Let me know if you guys have any questions. I'm not going to lie to you guys. What's going to make you better at drawing standard deviations is practice. Keep on drawing them. See them work out. Gain confidence. Back test it. And your standard deviations are just going to get better. And you're just going to get better at understanding which ones work and which ones don't work. But yeah, this is just a small part of how I trade. Standard deviations are OP and you should definitely incorporate them in your trading. If you guys want more videos like this, like and subscribe. If you have any questions, comment them down below. Or message me on Instagram. You need to be following me if you want me to answer your questions. I'll be glad to help you guys out. I'll see you guys later.